Ladies and gentlemen, good day and welcome to the Transformers and Rectifiers India Limited Q1 and FY26 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking. Thank you, and over to you, sir.
Thank you. Good day, ladies and gentlemen. Let me extend my warm welcome to you to discuss Q1FY26 result of Transformers and Rectifiers India Limited. To discuss results, I am pleased to have with us today Satyen Mamtora, MD, and Mr. Chanchal Rajora, CFO and advisor to the board. Before starting the call, let me again congratulate the entire team of Trill for outstanding performance yet again. With this, I hand over the call to Mr. Satyen for initial remarks. Over to you.
Good evening, ladies and gentlemen. A very warm welcome to all of you, and thank you for joining us on our Q1 FY26 earnings call. It gives me a great pleasure to connect with you at the beginning of what promises to be an exciting transformative year for our organization. Earlier today, our board of directors has approved the audited financial results for the quarter ending 30th June 2025. And the same have been submitted to the stock exchanges and published along with investor presentation. Let me begin with some of the key highlights from this quarter. During Q1 FY26, we recorded a total order inflow of 665 crores, reflecting the strength of our market position and customer confidence. This momentum has translated into an unexecuted order book of 5,246 crores as of June 30th, 2025, providing strong revenue visibility for the next 15 to 18 months. A standout achievement this quarter was securing a single largest export order in our company's history, valued at $16.65 million from one of the leading energy EPCs from the country, in Botswana. This milestone underscores not only our growing international presence but also our ability to deliver complex and high-value solutions to global customers. On manufacturing front, we are making strong progress on our capacity expansion and backward integration roadmap. The construction of our new 22,000 MVA manufacturing capacity at Moraiya facility has commenced. This facility will be reaffirming our commitment to operational excellence. In parallel, we have initiated expansion of our CRGO processing unit along with construction of our new backward integration units, aimed at enhancing quality, control and supporting long-term vision for self-reliance. These strategic initiatives are aligned with our ambition to become a global force in transformer industry. I am pleased to share that we remain firmly in our track journey towards achieving $1 million in revenue over the next 3 financial years. On behalf of the entire leadership team, I extend my heartfelt gratitude to all our stakeholders, customers, employees, suppliers, board members, and investors. Your continued trust and support remain the cornerstone of our journey. Together, we are building a future-ready organization that will not only lead transformer industry but also contribute meaningfully to India's evolving energy landscape. I now hand over. Before handing over the mic to our CFO, Mr. Chanchal, I would like all of you to please welcome Mr. Mukul Srivastava. He is joined us as the position of CEO and help us grow in the manufacturing sector. I hand over now to our CFO, Chanchal, to take you through the financial performance of in greater detail.
Good evening, everyone, and thank you, Satyen sir, for the strategic overview and your inspiring leadership through what has been a period of strong execution and transformation. I'm pleased to take you through the financial performance for the first quarter of FY26, which builds the momentum of last year and reflects our continued focus on the profitability and sustainable growth. Let's begin with the key highlights of the quarter. Revenue from the operation stood at 510 crore rupees on a standalone basis, marking a 64% year-on-year growth over the same quarter last year. EBITDA came at 97 crore rupees, showing 127% increase year-to-year, driven by the scale benefits and improved cost efficiencies. Profit after tax was 60 crore rupees, a significant 227% year-to-year growth, reflecting strong operational performance discipline in executions. Improvements of the operational efficiency and process optimization has begun to reflect positively on our profitability. Our EBITDA and PAT margins have expanded meaningfully over the prior year, and we continue to maintain the sharp focus on the cash flows and working capital management. We also continue to improve across our key operational and financial ratios in strengthening our balance sheet further and enhancing return on capital metrics. As on 30th June 2026, in quarter one, our current ratio stands 2.25, reflects a strong liquidity. The trade receivables days is at 126 days, which includes the retention money also. While the trade payables are at 72 days, indicating the better working capital cycle management. Looking ahead, we remain committed to the driving margins expansion, enhancing capital efficiency, and progression towards becoming a net debt-free company next over 18 to 24 months. We are fully committed to our long-term goals of reaching $1 billion in revenue next 3 financial years, and we believe that we are well tracked to achieve this. In conclusion, I would like to express my deepest gratitude to all of our stakeholders, our customers, investors, board members, and especially to our hardworking employees for their continuing trust and belief in our journey. Your support drives our passion to deliver excellence and create long-term values. With that, I conclude my remarks and thank you all for once again for the continuing support and interest. We all now open the floor for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 per participant. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Oswal from Nirmal Bang. Please proceed.
Yes, sir. Thank you for the opportunity and good set of numbers. Another great execution in the business. My question on our annual report, which we have released recently. So there's a trade receivable in the non-current assets which is sitting 336 crore versus 2 crore last year. So can you explain why the trade receivable sitting in the non-current asset? Difficult to understand because it should be part of the current assets. So why we have put it that way?
Manish, thank you for this question and welcome on this call. Manish, these are the non-current nature trade receivables, which includes the retention money, which we are going to get from the utilities in 1 to 1.5 year time. And also it includes the revenue debtors which are not immediately due for the payments. So this classification has been done by our auditors on their advice to understand better the exact trade receivable cycle what company is having.
So what is a typical time frame to receive this money of 336 crore?
Look, this is not 336 crore. 336 crore out of 336 crore, around 180 crore rupees was around this on the retention money, which we basically get in 12 to 15 months time when with the utilities. And it is a continuous process which is keep coming.
Okay. And one...
Next question, please, Shruti.
The next question is from the line of Samarth Khandelwal from ICICI Securities. Please proceed.
Hello, am I audible?
Yeah, Samad.
Yeah. Sir, firstly, congratulations on the performance. So my question is regarding what would be the size of specialty transformers for the company as an opportunity?
Sorry, I didn't get your question.
The size of special duty transformers that the company has. What would be the annual?
Around 35% of the turnover.
Okay. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Raj Saraf from Finvestor. Please proceed.
Thank you. I'm audible?
Yes, sir.
Yes, sir.
Yeah. Congratulations, first of all, for posting once again a very stellar set of numbers. So just wanted to ask the margin which is bumped up if I compare the same from last financial year quarter one. So is it sustainable, and what could be now we assess the PAT margin going forward, keeping all the backward integration keeping in mind, which is coming in next 3, 4, 5 quarters?
Yes, the margins are sustainable. Backward integration is going to help us in a great deal in terms of protecting our profits. But also with Mukul sir joining us, we are working towards operational excellence, and we are working towards operational profit. So that is going to help us more in terms of not raw material cost, but in terms of how efficiently we run our plants now. So that is going to help us a lot in securing our margins.
And Raj, just to continue what Randy has told just now, if you see that last 3 quarters, quarter by quarter, we are strengthening our margins. And this shows that trend is sustainable and on the right direction.
Okay, thank you, sir. And just one other question. Now, if I see the Government of India target to have installation of high voltage transformer, that is going to be actually double than the last we have done in financial year FY25. So though we have targeted the number of 35 crore, that is very phenomenal. So what is if I seeing the execution capacity and the capacity which is coming on right now to execute, so is the execution can be in line with what is the country going to install the capacity going forward?
Every transformer manufacturer is trying to align itself towards the country demand, and we are also working on that direction. And we hope that we all will be able to cater the country's requirement pretty soon.
Okay, sir. Any ballpark numbers, sir, if you can guide us for margin and PAT margins going forward?
We are at the levels which already is going on. I have been telling throughout my call that around 17-18% is the numbers, which is the sustainable numbers, and we are working on that direction. We are delivering that numbers. Right.
Thank you very much, sir. Thank you very much, and once again, congratulations, and wish you best luck for the future. Thank you.
Thanks.
Thank you. The next question is from the line of Ashish Soni from Family Office. Please proceed.
18,000 crore order book, when do you expect and what percentage are we expecting to convert in next 2? You have 18,000 crore order book, right?
No. It's inquiries under negotiation.
Yes. So that one, how many are you expecting in next 2 quarters or 3 quarters out of that?
So we should be closing our order book next year at around 5,000 crores.
But I think you guided, if I recollect last quarter, you guided at
unexecuted order book 5,000 crores next year. So on 1st April, our 1st April 2026, our unexecuted order book would be 5,000 crores. and we are expecting around 3,500 crores of turnover of this year.
So next year you'll again start with 5,000 crore order book. That's what you're saying? Because I think if I recollect, last quarter you told, I think, 8,500 crore by next year, order book wise, if I recollect.
Look, Ashish, what MD is trying to tell you is this, that we are basically now working on the directions where we can have the high margin order books and high margin revenues and high margin orders. So we are targeting that we should have the number of somewhere around 5,500 crore plus order book, which will give us the high yield revenue instead of going for each and every order. Right?
Okay.
So yeah, that's what we are targeting.
Okay. Thank you.
The next question is from the line of Anupam Goswami from SUD Life. Please proceed.
Good afternoon, sir. Sir, wanted to understand what is now, if you can give us some color on the TAM of us, like where which transformers level we are at, and that capacity, what is the TAM growing at, and export any scenario or any color if you can fetch, and after this tariff, how difficult or any challenge we will face or not?
Anupam, can you repeat the first part of the question again?
Sir, the capacity of transformers we are in that, how is the macro scenario looking at? How is the market looking at? And what kind of growth you are looking? And also in the export part?
The country is planning to expand a lot of capacity, almost doubling the power generation capacity. So like any other transformer manufacturer, we are also trying to add the capacity, and this scenario is likely to remain there for at least 5 to 7 years. That is what we also expect. As regards to your question on exports, we are looking at certain areas for exports. You know that we won an order from one of the major customers at $17 million from Botswana. But we are a little bit choosy because already with the existing order book we have little scope for expanding on exports.
Our exports would remain at 10%. 10%.
Sir, any exposure to US?
No, not currently. Nothing that we have in hand.
Got it, sir. Thank you.
Thank you. The next question is from the line of Ankur Goel from Green Portfolio. Please proceed.
Hello, sir. I hope I'm audible.
Yes, sure.
Okay. So my question is, after all expansions are complete, how much revenue and order execution does management expect will come from each plant?
Ankur, if you remember that, then we have been last 2-3 quarters, we have been guiding that we are working on a direction of $8 billion revenue.
Yes.
$1 billion revenue, and this revenue basically includes the extensions what we are doing it. Right? So as we are targeting for next 3 years numbers, so this includes the revenue which is coming from the extension also.
Okay. And sir, my second question is regarding receivable days. As we know that from past quarter, receivable days are improved significantly. How sustainable is this in the context of raising volume and new client segments?
This is a long-term sustainable figure what we are eyeing, and last 3 quarters, if you see that we are continuously delivering that.
Okay, sir. Thank you.
Next question is from the line of Samarth Khandelwal from ICICI Securities. Please proceed.
Thank you for the opportunity once again. So my question is regarding recently government came out with that they'll be coming out with an incentive scheme for producing in India high voltage related transmission equipment. So do we see any opportunity there? How do we think about this?
It is not for the transformers actually, but we are still exploring if something is there for us. But it is not for us. It is basically for the equipments like RIP bushings and others.
Okay. Okay. Sir, next, one more question, if I may. This is with respect to the capacity, expansion capacity we are undertaking. Could you outline by when it will come live?
Sorry, which capacity are we talking about?
We are undertaking expansion of
the Moraiya
manufacturing.
The Moraiya plant should be operational by end of quarter 2.
The 15,000 MVA.
The expansion, the expansion of Moraiya plant should be operational by end of quarter 2.
Okay. Thank you.
Thank you. The next question is from the line of Rajesh Vora from Saltro Investment Advice. Yes, sir.
Okay, I have a small request. Please take the repeat questions at the last once all people who are in line are finished.
Okay, sir. Noted.
Please request participants to one question at one time.
All right, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to one per participant. The next question is from the line of Rajesh Vora from Saltro Investment Advisors. Please proceed.
Congratulations on a great set of results. I wanted to understand the competitive scenario. So on one hand, the incumbents are raising their capacity given the demand, and on the other hand, there are new players who are also trying, who are in low voltage, are entering into 400 kV and higher voltage class. So I want to understand how does it move from in a couple of years of time, and for new players particularly, how long does it take for them to certify and start competing with players like us? So if you could take through that and positioning ourselves to deal with the competition, that would be great.
Rajesh, see, currently our unexecuted order book is 5,246 crores. We have live inquiries which are, in finalization stage in the next 2 quarters, and we are hopeful that we should be ending our year with at least 5,500 crores order in hand executable for the next year. New competition is coming, yes, but at the same time, that competition has to have their PQs met. As long as the PQs don't meet, which will take at least another 18 months for them to meet PQs. So I don't see there any change in the scenario in terms of P&R's orders. And also, there is so much business and demand in the market that even with the new players that are coming in, not much effect is going to be on established manufacturers.
So given the demand, how many players can it typically accommodate? Given the fact that it's a 7-year cycle as you're seeing, and with new players also entering, how many players can it accommodate?
As many as new players are coming, demand is so huge. Right now, that's not a problem.
And plus, Rajesh, you also have to understand that when P&R is looking now with all the expansion that we are doing and all the backward integration, we will have a certain advantage over the raw material cost of everything. So when you have that advantage on the raw material cost and also the deliveries of the raw material, definitely we are going to be at a greater advantage than them.
Got it. All right. Congratulations. I'll get back in the queue. All the best.
Thank you.
Thank you. The next question is from the line of Ruchita from iWealth. Please proceed. Ruchita ma'am?
I think she left.
Hello.
Yes, ma'am.
Yeah. Hi. Good evening. So congratulations on a good set of numbers. So my question was more on the gross margin side. So from the last 2 quarters, we've seen a bump up, right, from 30% to 35%. So what has led to this, and is this gross margin a new normal for us?
Ruchita, you can consider that.
Okay.
We are on an ongoing process of constantly upgrading our manufacturing facilities. We are in the process of, manufacturing excellence. So yes, you can consider this as a new norm, but things will change as we become more efficient in terms of manufacturing transformers.
On a positive side.
On the positive side, yes.
Okay. So as and when CRGO comes, our margin should improve even further.
Generally, yes, but there are always tailwinds to the business.
Okay. Understood. Because if this margin continues, then with operational efficiency and all of that.
Yes. Operational efficiency improvement is an ongoing process which we do continuously.
It is a constant ongoing process.
Thank you. The next question is from the line of Priyesh Babaria. Please proceed.
Hi, sir. Good evening. So just one question on the order inflow side. We are seeing kind of a 5% decline in terms of order inflow on a year-on-year basis, considering we have secured around 700 crores of orders. When we look at, let's say, our peers, specifically into this segment only, they have shown almost twice order inflow compared to us. And also, the second question is, when we look at, let's say, when we are targeting 5,000 crores of order book, and lastly, we have secured approximately around 525 crore for the domestic orders. So we will need approximately around 4,000 crores of orders. So have we lost any market share, in the current quarter, considering peers are showing a very strong growth in terms of order inflow? So just wanted a color on this.
Priyesh, if you have been following us, our earning call, in last earning call also, MD sir has very categorically says that now we have become pick and choose in terms of the order. We are choosing the order considering what is the revenue margins we are making as well as what is the delivery time is there. So we are not going after every order, and we don't want to go that. So whenever, as and when good opportunity comes, we are taking into that. As far as the 5,500 crore rupees order book is concerned, please understand, I have right now 18,000 crore plus inquiries, and which is every day is building up. So if I take 20-25% of that, also I am reaching to that numbers also. And it's again on me that how much number we can take into that. And please also understand that in this the distribution transformers which our one unit make, we don't have any inquiry of that, because that is a cash and carry order book. So there is nothing like that we are losing to anybody. Yes, we have become more smart in selection of the orders.
Okay, understood. Sir, can I squeeze one more question, please?
Yeah, tell me.
Yeah. So thank you so much. Sir, so this gross margin expansion that we are seeing for the current quarter, that is first quarter, approximately around 200 bits of expansion. Is it a function of more of a, let's say, kind of a scenario of pricing power, or the raw material costs have been declined? Just wanted a color on this. Thank you.
Combination of both.
It is basically the combination of various factors. Price increase is also there, operational efficiency is also there, and the better control on the raw material also there. This is there.
Okay. And incremental order inflows, how has been the pricing scenario as of now?
It's the same levels.
Okay. Thank you, sir. Thank you so much. I wish you all the best for the future calls.
Thank you. The next question is from the line of Bhavya from Chris PMS. Please proceed.
Hi, sir. Congratulations for the good set of numbers. Sir, how much is the margins in the export orders that we just won?
So margins are at the same levels nowadays, Bhavya.
Okay. And sir, out of the 18,000 crores inquiry, how much would be the pipeline of exports in the inquiries?
The size of the exports would be around 25%, but the orders that we would aim at would be only 10% of our total turnover next year.
Okay, understood. And what geographies, sir, that order?
Not more than 10% of exports. Okay.
Thank you. The next question is from the line of Saurabh Khara. Please proceed.
So what gives you the confidence that you will continue the current growth trend?
Sorry, Saurabh, I could not understand what you are trying to tell.
What gives you the confidence that you will continue the current growth trend?
Yes, sir. We are fully confident, and order book and inquiries reflects that also.
So what is our current capacity utilization?
Last year, when we ended up in March, we were at around 65% capacity level, and this year we are targeting to reach around 85 to 90% level.
Okay. Thank you, sir.
Thank you. The next question is from the line of Abhijit Singh from Systematics. Please proceed.
Yeah, thank you for the opportunity. So my question is on the new product introduction that we are planning on. So in the last few calls, we are talking about the green hydrogen transformer. And so one is how is that product panning out? How is the market response for that product? And how much sales, order inflow, and order book does it contribute to us? And apart from the green hydrogen transformer, is there any other new product or new category that we are planning to enter into?
See, the green hydrogen transformers are currently at the R&D stage because these are going to be large transformers. So we are currently under R&D stage and to make them financially viable, that project to make them financially viable, such large transformers will still take some time. But they are currently in R&D stage.
So any stand that you can give right now? I understand maybe for the next 1 or 2 years, the market may be limited, but going forward, let's say, because we are also anticipating strong demand for green hydrogen. So in that context, can this be really big for us in the next 4 or 5 years?
I seriously didn't understand your question. Can you please, repeat your question?
So my question is, what can be a target addressable market for green hydrogen transformer in, let's say, next 4 to 5 years?
See, the financial viability of the project is going to be the governing factor on it. So we really can't estimate how big the market is going to be. However, what we are planning and what we have been doing, we could touch around 500 to 550 crores in terms of green hydrogen transformers.
Right, sir. Right. That's helpful. So last on the export strategy. So if I'm not wrong, we've talked about 10% of revenue contribution from exports. Is that correct?
Yes.
Okay. So we are basically focusing more on the domestic market as of now because of the huge demand that is coming up.
Yes.
All right, sir. Thank you for answering the question. That's it from my side.
Thank you. The next question is from the line of Aditya Agarwal from Fine Avenue. Please proceed.
Good afternoon, sir. Am I audible? Yes. Sir, I just wanted to ask that is there any slowdown in inquiries under negotiation like in the Q4, we had an inquiry under negotiation of somewhere around 22,000 crore, whereas it is somewhere around 18,000 crore rupees right now.
It is
And also on the
18,000
order.
MVA. It is 18,000 MVA. 18,000 crore, sorry, yeah.
Yeah, 18,000 crore. And on the order inflow side, in the Q4, we had an order inflow of roughly around 2,200 crores, and over in the Q1, it is 665 crore. So, is there any slowdown in the order inflow side that we are facing or in the overall space, or is it just the seasonal factor?
No, this is not a slowdown. These are, long drawn projects with a large gestation period. So, it is not that it will go on a uniform basis. So some pluses and minuses can happen. 18,000 itself is a large number. So, I mean, beyond that, beyond 10,000 numbers, it is such a large number that some fluctuation can happen. So this is no indication of slowdown.
And historically, if you see in Q1 and Q2, the order book is normally slow, and once Q3 comes, order book starts picking up.
Okay. And sir, any plans for moving to HVDC? Like in the previous Concall, we said for that we are looking for 1,200 kVA side. So, is there any progress?
We are still exploring, nothing concrete as of now. Whenever we will have something concrete, we shall let you know.
Yes. Thank you so much. Thank you so much.
Thanks, Aditya.
Thank you.
The last question, please.
The next question is from the line of Amit, an individual investor. Please proceed.
Yeah, thank you for the opportunity. My question is, in our 3,500 crores of revenue this year, how much will be coming from USA? And we have vision of $1 billion revenue by FY28. Whether the tariffs imposed by Donald Trump can affect our vision of FY28?
We currently have no inquiries from US, and we are very wary of getting any inquiries from US, or so there is nothing that can harm us either way.
And Amit also, just for your information, this transformer comes under the strategic list of everywhere in the world. So nothing is going to affect.
Okay, thank you, sir.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for the closing comments. Over to you, sir.
I would sincerely like to thank each and every one of you for taking time to join us today, for your continued trust in our journey. We hope we have addressed most of your inquiries, and we look forward to many more meaningful interactions with you in the future. Thank you.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your line.